It's been a tough year to stay ahead of the market with these videos. Honestly, by the time I record and edit one, the headlines have already moved on, and so have the markets. We've seen a lot of volatility lately, but what's remarkable is how quickly things have bounced back. Much of the losses from earlier this year, especially after that big drop that we saw in April, have now been erased. So what are we doing about it? Well, we took a little risk off the table earlier in the year, and now that markets have bounced back, we're taking a little more. We've trimmed our slight overweight to stocks and moved back to a more neutral position. It's not about turning negative, it's about being thoughtful and selective after a strong rally. Within US stocks, we're leaning into our highest conviction ideas like large, high-quality companies with strong balance sheets and long-term growth drivers, especially in areas like AI and tech infrastructure. Outside of the US, we're adding a little bit more to developed international markets, especially in value-oriented areas, to help balance our exposure between growth and value. In emerging markets, we're still cautious on China in the long term, but in the short term, we're dialing back the underweight slightly to reduce volatility from sudden policy headlines. On the bond side, we've adjusted for more inflation protection in the short term and added some duration, meaning we're preparing in case growth slows and the Fed starts cutting rates later this year, which we think is still a real possibility. Bottom line, we're staying active, not reactive. This market is being driven by headlines like tariffs, inflation, and Fed policy, but we're focusing on what still matters most: strong fundamentals and smart risk management. As always, if you have questions about what this means for your plan, please don't hesitate to reach out. Thanks for watching.